My name is Khalisa Aina Binti Kamarudzaman. I would like to present to you about the sales and collection cycle. So the class of transaction involved in this cycle is the first one is sales, cash receipt, sales return and allowance, write-off of uncollectible account, and estimate of bad debt expense. The first assertion of this cycle is occurrence. Occurrence is the transaction or event that have been recorded or disclosed. The objective of this assertion is to identify whether all transactions and events that have been recorded have occurred and required. The relevant account or ledger that involved in this cycle is sales account, account receivable, sales return account, and bad debt expenses. The internal control is each sales transaction is supported by the necessary document such as approved sales order, shipping document, and invoice. For the test of control, it can examine proper approval for customer order, delivery note, and sales invoice. Observe the independent handling of complaint about monthly statement. For substantive tests, it can be done by select sample from sales journal and trace to sales order, sales invoice, and delivery note. Trace the cash receipt journal to bank statement and proof of cash receipt. The audit evidence is reconciliation of bank, pre-listing of cash, reconciliation of document, and cash receipt transaction. The possible misstatement that can be occurred is sales are recorded more than once and the shipment made to non-exist customer and recorded as sales.
My name is Nurhanis Binti Ahmad Kamal and my ID number is 2020959741. And the next one is completeness. Completeness is all transactions and accounts that should be presented in the financial statements are included. The audit objective of completeness is to deal whether all existing sales transactions are actually being included in the journals and recorded in respective accounts. There are few relevant account or ledger that are related to sales and transaction cycle, which is sales, account receivables, cash or bank account, sales return, bad debts, and allowance for the full debt. For the internal control, we can use shipping documents are typically sequentially pre-numbered and compare the amount shipped with the total of amount billed. There are few tests of control that we can test on completeness, which are chapter numerical sequence and completeness of delivery notes and sales invoices. Other than that, we can also observe immediate preparation of income tax in listing and endorsement of income tax. For the substantive control, we can trace the delivery notes or sales invoices to entries in sales debit and debtors ledger. We also can trace the incoming check listing with the bank statement and cash receipt. There are few audit evidence that we can use, which are delivery notes, shipping document, sales invoices, cash receipt, bank reconciliation, and debtors ledger. There are also possible misstatement, which is sales transaction and account receivables recorded are overstatement and understatement.
Assalamualaikum, my name is Nurhanis Nadirah Binti Mustafa and my ID number is 2020988265. So today I would like to present one of the assertion in the sales and transaction cycle, which is accuracy. What is accuracy? Accuracy is all transactions were recorded accurately with an appropriate amount and without any error. Next, the audit objective is to ensure that all transactions of sales, such as the amount of the goods shipped, are accurately billed and recorded. Next is the relevant account or ledger for this assertion is sales, cash or bank, sales return, bad debt, allowance for doubtful debt, and account receivable. Next is the internal control that can be done is all the transactions need to be supported by a necessary document. Next, batch total of quantity shipped need to be compared to the quantity billing. And lastly, the unit price for each item should be obtained from the company's authorized list. The task control that can be done for this section is examine a proper approval supporting documents such as customer order and delivery note. Second is examine the proper price list obtained from the company's list for the accuracy and proper authorization. Next is review the bank reconciliation prepared by an independent person. Substantive control that can be done for this section is vouch detail of sales invoice to the related customer's order, delivery notes, and price list. Next is trace sales invoice to the sales recorded. And lastly, trace the cash receipt journal to sales invoice, bank statement, and the proof of cash receipt. Evidence for this section is bank reconciliation, pre-listing of cash, reconciliation of document, and cash receipt transaction. Next is possible misstatement. Possible misstatement that could be done is first, overstatement or understatement of sales and account receivable. Next is overstatement or understatement of sales return and allowance. And lastly, uncollectible account receivable that have not been provided for. I'm going to present the next section, which is posting and summarization. Posting and summarization is a sales transaction that included in the account receivable master file and correctly summarized. The audit objective for this section is to check whether all of the sales transactions are included in account receivable master file and correctly summarized. Relevant account or ledger for posting and summarization is sales, cash or bank, sales return, bad debt, allowance for doubtful debt, and account receivable. Next, internal control that could be done for posting and summarization is first, statements are sent to the customer each month. Second, the computer will automatically post the transaction to the account receivable master file and general ledger. Lastly, account receivable master file will be reconciled to general ledger using monthly basis method. Of control for posting and summarization is examine the evidence that the account receivable master file reconciled to the general ledger. Next, observe whether the bank statements are correctly signed. Substantive control for posting and summarization. First, trace the selected sales invoice from sales journal to the account receivable master file. Next, use the audit software to foot and cross-foot the sales journal and trace the total in general ledger. Audit evidence for posting and summarization is sales journal, sales invoice, account receivable master file, and monthly statement. Next, possible misstatement that could be done during posting and summarization is overstatement or understatement of sales.
Hi, my name is Saidatul Rahima Binti Halim with master number 2020-988-277. Let's continue with the next management section, which is classification. Classification is where transactions have been recorded in the proper accounts. The audit objective is to ensure that all revenue and cash receipts transactions have been recorded in the proper account and correctly classified. The relevant account or ledger for this section are sales revenue, cash, sales return, bad debt allowance for doubtful debt, and account receivables. As for the internal control, the management will make sure the account reclassifications are internally verified. There are tests of control and substantive control for audit procedure. As for the test of control, the auditor needs to examine document package for internal verification and trace cash receipt to cash receipt journal for proper classifications and review cash books for unusual items. Next, for the substantive control, the auditor needs to examine supporting documents for sales transaction and evaluate whether the transactions are properly classified. Besides that, the auditor need to examine documents supporting cash receipt for proper classification. The audit evidence that will be used in this assertion are customer order, sales invoices, and credit notes. Misstatements are possibly happen just as sales transactions are wrongly classified to other account. Next, I will present about the last assertion in this cycle, which is timing. Timing is where transactions have been recorded in the correct period. The audit objective of this assertion is to ensure that all revenue and cash receipt transactions and events have been recorded in the correct counting period. The relevant account or ledger to this assertion are sales revenue, cash, sales return, bad debt allowance for doubtful debt, and account receivable. As for the internal control, the management will ensure that the shipping documents are pre-numbered and accounted for weekly by the accountant. However, there are some deficiencies in this assertion. For example, there is a lack of control to test for timely recording. Next, we will move to audit procedure, which is test of control. As for test of control, auditor need to review documents for unbilled shipment and unrecorded sales and compare the dates on delivery notes, sales invoice, and entries in sales journal. Auditor also need to observe unrecorded cash at a point in time. The next audit procedure is substantive control. In this procedure, auditor need to compare the dates of recorded sales transaction with date on delivery notes and sell sample of goods received notes immediately prior to the year end and immediately after the year end and ensure that they have been recorded in the correct period. There are some audit evidence that will be used in this assertion, such as sales order, sales invoice, general journal, and shipping documents. There are some possible misstatements that likely to happen. For example, the sales transactions are recorded on the wrong date.